And Ajay Bodke of Prabhudas Lilladher is also with us to talk about individual stocks and the markets. I'm going to welcome all of you on the show, but Ajay, I'm going to come to you first. The big driver of this market in the last many weeks and months has been the Bank Nifty and individual banking stocks. At this juncture, are there any fresh buys that you would advise in the banking space for investors?
I think most of the banks, especially the private sector high beta banks like ICICI Bank and Axis Bank, we were recommending investors for the last 3 months. However, I think with the 25 to 27% sharp move that one has seen in some of these frontline banks, along with even names like Yes Bank, is currently making me slightly worry in jumping and buying these banks right away. I would be a buyer in all the 3 banks, Axis, ICICI and Yes, but only on declines. I think ING Vysya is one bank which has seen an up move, but nowhere close to the sharp up move that we saw in the other banks. I think there is still value in the ING Vysya Bank. I'm looking at a medium-term price target of 625 rupees in case of ING Vysya Bank. We are expecting around 20% growth in earnings this year and around 29.4% growth in earnings next financial year for Yes Bank. ING Vysya, and it's trading at a very reasonable 1.4 times FY16 book, price to book. So I think that is one bank where one can look at taking a medium-term call.
Okay. Well, Ajay, nobody escapes the gas price hike question today. But before I come to the stock impact, I just want to know whether long-only investors or foreign investors will worry about India's ability to take decisions altogether.
I think, in my opinion, this decision is regressive because the decision was taken, a decision by the Election Commission, I mean, is regressive because the decision to increase gas prices was taken a good 10 months back. There has been wide debate among various sections of policy makers, investors about this particular decision, and the market was banking on the continuity insofar as this decision was concerned. In fact, I would have also weighed in the camp that not taking a decision is something which should have been. I mean, the decision should have gone ahead, and this again raises the questions about the continuity and stability in terms of policy, which is doesn't augur too well from the foreign investors' perspective.
So immediately you all are putting out a sell on ONGC Reliance Oil India for the immediate potential loss of money?
I would say that the market had discounted if you take Reliance from 796, the stock has moved up all the way to 905, and this was to an extent also predicated upon the decision going through. So to the extent that there is disappointment on this decision, there would naturally be some sort of a correction. However, I would be a buyer in case of Reliance on correction, and I would not look at it as a medium-term sell.
Okay, that's an interesting observation. But Siddharth Bhamre of Angel Broking is also with us. Siddharth, what is your view on how to approach the index this morning? Would you advise a fresh call, or after the big run-up that we saw yesterday, you would wait a bit?
Good morning, Sonia. People have been waiting for dips since last 10 days, and I don't think so anyone has got any meaningful dips. And when dips usually happen, people shy away from buying this market. This market is not going to show you much of correction. That is our call. And I want to take some time to tell that why we continue to hold on to long positions and why we feel that from here also one can form fresh long position in this market. Your 2 foreign guests who were giving views on markets today morning, one was raising concern about China and one said that India is good to invest, but some earnings concerns are there. Russia, there is a concern. Brazil is just a commodity market. FI is sitting in US, Europe, Singapore. They don't have much choice but to invest in India. 2 people are going wrong in this kind of market. First, who believe that this rally may not sustain and this is just a bubble trying to give name to the money. Second, those people are wrong who are thinking that this run is pre-election rally and this is Modi run. I believe this is India run, this is not Modi run. Whatever factoring of election thing has been done long time back. Now FIs are completely investing again in India story. Now if I get into technicals and derivatives of this market, why people are not believing that this is a multi-year breakout. If you look at weekly chart or you look at monthly chart, this is a clear-cut breakout. You are seeing that FIs are buying and volumes are happening in cash market as well. So this breakout is with volumes. If you look at derivatives data, FIs are buying in index futures big way, forming long positions. Look at yesterday's index options data, which probably has not been discussed. 65,000 contracts built up in 6,600 put, and the sell figure from FIs in index option, and the implied volatility of call surged significantly, but put didn't surge that much. This clearly indicates that this market is heading higher. You won't see dips, and I am expecting expiry to be probably 100-150 points higher from current levels.
So what is the
So we
strategy,
continue to
Siddharth?
hold on to our
Strategy,
long
yeah.
positions.
What is the strategy, Siddharth?
Stay long, buy call options, you form spreads. The best strategy at this point of time is forget options, you go long index futures, Lata. Be it Bank Nifty or be it Nifty. Not always you would have, some option exotic strategy which would give you good returns. This market is simple. It has given you a breakout. People are not believing it. Go long futures.
Right. Ajay, a big chunk of our respondents who we polled indicated that the infrastructure space could be the driver from now until the 16th of May. I just wanted your view on L&T because there is a big upgrade from CLSA that's come in this morning. Would you still advise a buy on L&T despite the run-up?
Well, I think, there are a large number of structural constraints, which have become binding insofar as infrastructure growth is concerned. And these structural constraints hobbling the growth in infrastructure sector, i.e. a plethora of laws and rules on environment, forest, tribal affairs and land acquisition are not going to go away just because the new government comes to power. So I think that is a caution that I would advise investors in. I am positive on capital goods and infrastructure space. I think one has seen a sharp rally in names like L&T, Voltas, Crompton. Right now what's happening in the market is that because there is a limited scope for increasing the earnings, a lot of analysts are increasing the discounting or the P ratio for most of these stocks to justify the fact that they have moved up by 25-30% and sort of to make them look slightly more attractive in the medium term. So I think L&T would clearly be the pick insofar as infrastructure and capital goods space is concerned. But at the current levels, unfortunately, our analyst is still advising caution. He is saying that you look at it from a medium-term perspective, but only on declines.
All right, gentlemen, stay on with us. We have to take a break and we will come back, of course, with the pre-opening rates as well as more trading strategies.
MCX Stock Exchange, India's new stock exchange, presents Bazaar Morning Call.
In association with Raindrops Basmati Rice, pure rice from pure water. And
Tap Banking from ICICI Bank.
Congratulations to NSE and its management. I think they have brought in equity culture in India. They have contributed tremendously to the equity culture and the awareness among the investors and credibility to the entire process of trading. So I think congratulations for doing this to National Stock Exchange and its management.
Celebrating 20 years of NSE. Add Servo. Add life. Servo, a range of world-class lubricants from Indian Oil.
The only way not to think about money is to have a great deal of it. Whether you want to find out how you can pay less tax or buy the latest iPhone, a holiday in Europe, or get a new set of wheels, and own your own apartment, we'll tell you how to earn, save, and spend your money the intelligent way. Money, money, money at these times only on CNBC TV18.
presented by Pentad Securities.
This is TV18. And you're watching CNBC TV18. MCX Stock Exchange, India's new stock exchange, presents Bazaar Open Exchange.
In association with Khushbudar Lambe Dane Wala Shri Lal Mahal Empire Basmati Rice. And Star Health Insurance, India's largest health insurance company.
Welcome back. Let's just wait for the market opening. It's about half a minute, okay, 25 seconds. We may not be able to get through a buy or a sell from our experts. So just pick up the SGX Nifty, a little downbeat. Those are negative cues coming even from the US, and a bout of profit taking is obvious even on the Nikkei and on some of the Asian stocks. So perhaps we should see some level of profit taking. And then, of course, the oil and gas news, the gas news itself will perhaps shave off some amount of money from two big guys, RIL and ONGC. Well, what are the markets opening trades saying? Oh, this is a 0.7 cut, but the Sensex is way more sedate. It's just about flat at this point in time. So let's see. Nifty is showing a 3% cut. Is that right? Okay, I think this is getting a little bizarre. So we have to wait and see if there is something that we can get more in individual stocks. Stocks in focus are going to be RIL and ONGC for sure. Okay, Reliance starts with a 2% downtick. Mr. Tulsian was saying that even 3% is possible. 2% in pre-opening rates, and that's a 2.5% cut in ONGC. So clearly, for every dollar loss, 4,000 crores is what they have said. So clearly, some 3,000 crores goes away. The rupee is still opening strong, if you will notice, 60.60. So at that level, there is no problem. There is a lot of domestic flows itself which is coming in. It's not only FII flows that are keeping the rupee strong. So rupee is now, I think, at now a fresh 1 month high or something like that. 60.60 was the prevailing high. It's become 60.58. So rupee going strong over there, and that might add a few pennies to the way in which the stock market will perform. But okay, let's get to which stocks are doing well at this point. I mean, ICICI are minus 10%. I don't see why that should happen. HCL Tech minus 5, HCL Jindal Steel minus 5. These are getting very, very bizarre. Let's see if we got anything in the positive. JP Associates starts 1.94% positive, almost 2% higher. Axis starts 0.9 higher. Cipla starts higher. IDFC is not rattled at all by a potential postponement of bank license, up 0.67. SBI up 0.5%. Reddy's 0.5% or 0.4. thereabouts. But once again, if you can check the red stocks, ICICI continues to start with a 10% downtick. I think that remains bizarre. It must be a one-off trade. JSPL now down minus 6.5, HCL Tech minus 4.6, Bank of Baroda minus 3.7, Reliance minus 2.9. Those are the biggest stocks.
Well, we'll wait for the rates to stabilize. I mean, these are not the rates to be believed. I think the Sensex rate is a more believable rate. There could be a slightly choppy move today, but it could restrict itself to less than a 0.5% cut. So let's get back to speak to our guests. We were speaking with Ajay Bodke, Siddharth Bhamre and Mr. Tulsian as well. Mr. Tulsian, we do have, a lot of big monthly gainers in the broader markets, some of these banks, some of these auto companies, etc. Anything that you could identify as a buy for us in the mid-cap space?
See, since you have touched on the automobile, you don't have any mid-cap in that space. I won't be, going with TVS Motor. But yes, as a trading...
Even the ancillaries?
In ancillaries, there are many ideas, but I think you need to have a longer horizon. If I just give maybe, Wheels India, which has corrected post-rights issue, if it corrects further by about 30-40 rupees, that looks good. Munjal Auto, that looks good. Autoline Industries, that looks good. It is just the pricing or maybe the right entry point. Maybe Bosch, which has corrected a lot, that's a very expensive stock. That looks quite good. So these are some of the ideas, but in the larger automobile space, I'm positive on Bajaj Auto.
Okay, actually the red tick continues. Look at the Nifty, it is still down about 45.50. So even below the 56550 level, and the Sensex also is showing a down tick. But the rupee is charging on, no stopping that currency. Ajay, what are your choice mid-cap stocks at this juncture?
I think Motherson Sumi in the auto ancillary space, we continue to remain positive on that. The stock has had a run from 185 to around 230. But our analyst believes that it has a potential over the medium term to go to 265, and in the longer term, it could even look at we could even look at a price of around 300, essentially based on the strong performance that the company's subsidiaries are posting in Europe. I think we are expecting an earnings growth of 26% in FY15, followed by 30% in FY16. The company has very strong ROEs of around 35% in FY15 expected ROE. and around 37% we are expecting in FY16. The stock is trading currently at around 12.6 times FY16 earnings. So that is one stock we are extremely positive on in the auto ancillary space. Apollo Tyres has had a fair run, but there again we are expecting the rubber prices sort of being at multi-year lows. The stock could sort of run up in the medium to around 160 levels. In the other sectors, I think Britannia is something we like. There, I think a target price of 1150 in the medium term we are looking at. We are estimating a 21% growth in earnings in FY15, followed by around 24% earnings growth in FY16. And the company has extremely strong ROEs, 47% in FY15, 52% in FY16, and trading at around 17.7 times FY16. So these three stocks, from a fundamental perspective, I would recommend investors in the medium term.
All right, Ajay, Mr. Tulsian, thank you very much for joining us with your trading strategies. Don't lose sight of the rupee. At this point in time, it's heading to some kind of a high for sure. 60, 58, I can't remember it going below that 60, 50 almost.